Welcome to This Week in Money. I'm Jim Goddard. Ross Clark from chartsandmarkets.com runs down the major markets for us this week. After a big drop on Monday, they bounced back to new highs by the end of the week. However, the charge higher was led by just a handful of companies. Ross also looks at the latest interesting IPO. InsideTrackTrading.com President Eric Hadik examines the cycles that the markets appear to follow and their impact on inflation, the U.S. dollar, interest rates, gold, crude, and commodities. One of Canada's top all-time realtors, Allan Angell, reports in from West Vancouver on how Canada's priciest real estate market is doing during a cross-country real estate boom. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Allan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to the show, Ross.
Nice to be back, Jim. It's amazing what happens when you take 10 days off, and a lot of volatility out there in the meantime.
The week started off on Monday with the markets taking a big plunge. People thought, uh-oh, here we go. And yet, at the end of the week, more record highs. Yeah,
a great week at the end. That's the understatement. I think Monday was one of the worst days in 3 months. We'd been looking for a sell-off here, and I expected that we'd get an initial break, a bounce, and then probably back down into August. But on Monday, it sort of bells and whistles went off. Our springboards that we look for at interim lows when you're in a dominant uptrend, we look for sell-offs towards either the 20 or 50-day average. This one was right into the 50. And the intraday, looking at the hourly and the 2-hour charts, we got capitulation signals, and when you get signals in various time frames, more than one time frame, then they tend to have a lot of power behind them. So, the initial bounce, it's interesting here. You've got the big cap names in the S&P, the Dow, and the NASDAQ that are really pulling this market up. But when you look at the advanced decline lines of either the S&P or the NYSE, they're not up near their highs. They've just made back about maybe half of the decline that they had into the initial break. And if you look over at the transports and the Russell 2000, these are indices that topped months ago, and even the bounce back at this week was really a very understated kind of movement there. So, this is it's a narrow-based market, and unless you're in the right sectors, you're not getting much of the movement.
What's going on with crude?
I guess this is OPEC from last weekend. The Monday was a good solid break. We've been looking for the support area just around 72 as being important, and if it broke that, then you would expect a much deeper correction. And just like the S&P, we got the type of signal, the same signal actually, on the crude oil, down at 65 and a quarter. And it made the same style of reversal. We're back to 72 at the end of the week. So pretty much in the upper, let's call it the upper quartile of the range that we've had for the last month and a half. The interesting. The market started, I think, looks a little bit heavy up here. Probably has to do a fair amount of consolidation. But that $65 low that we put in is going to become the new big make or break spot for the oil market.
Robinhood, the guys who dare challenge all of those hedge funds, an IPO for them, for a company that, again, has never made money?
Yeah, and, the rumor is they might, raise as much as $35 billion. And, they're hoping that most of the raise comes from the individuals, which is who they tend to cater to, and just sort of balking at the institutionals. So this, once again, is indicative of the type of marketplace that we are in right now. It's a frothy one, and with a lot of the less sophisticated individuals involved. And, in a bull market, everybody, thinks that they are so smart and it's so easy to make money. The problem will become what happens when this thing decides that it's either, maybe going to pause for a year or two, or even worse, have a big correction. So the magnitude of the moves that we've seen would suggest that at some point in the second half of this year that you're going to see at least an 11% decline. And from what level, we don't know, but the probability, I think, as we move, as I say, into the second half, is for one of a degree of caution.
Ross, thank you so much for chatting with us.
Yeah, good to be back with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Eric Hadik next on This Week in Money.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Eric Hadik, CEO and president of InsideTrackTrading.com. He's speaking to us from the Chicago area. Welcome back to This Week in Money, Eric.
Oh, thanks for having me back, Jim.
Eric, can you tell us a little bit about Inside Track Trading?
Inside Track Trading is a advisory service really focused on technical and cyclical analysis of the markets. We provide various publications, but really emphasize a lot of our educational material too, so that kind of the old proverb of teaching a man to fish instead of just giving him a fish. So we try to really provide the analysis, but also guide readers and subscribers through the processes that went into that analysis, and so that ultimately they can do it themselves, apply it to their specific needs, and hopefully still stay with us for a while.
Inflation, governments, Canada and in the U.S. have released figures indicating that the annual inflation rate is running at 5.4%, and that's the official rate, which excludes things like taxes, housing, and energy. Is there a cycle to this, and what can we expect if there is?
Well, I believe there's definitely a cycle, but I think that you also need to put all of those numbers in proper context and get an accurate perspective, because number one, I have been saying all along that we should have a resurgence of some particularly commodity price inflation from late March of 2020, when a lot of major cycles bottomed, both paper inflation, as in stocks, and commodity inflation, led by things like silver and some other commodities back in late March and April of last year. And that I thought that wave of inflation, the one that's applying to commodity prices, would drive a surge into the middle of 2021, and then somewhat of a consolidation phase, and then another leg up into 2022. And I go into the various cycles in several of my publications. But I think you also need to, like I said, put it in proper perspective, because when you talk about year-over-year inflation, just think about that for a minute. And you're now into the time frame where these months from April, May, June, July of 2021 are now being compared to the nadir, the low point of panic and selling and deflation of 2020. And so when everything kind of crashed in March of 2020, and then the impact of that reverberated for a couple months, some things had to catch up with that down phase or that down wave. And so some of your worst stuff, energy prices bottomed in April of last year. Some other markets kind of retested lows in July of last year. So everything was at its worst point in April through July of last year. So obviously, even if you came back up to normal, then April through July of this year would look like this phenomenal gain in inflation, because you're comparing it to an abnormally low level last year. And so some of that, I think, will still show up in the numbers for a couple more months. But I do think we are getting to some extremes in a lot of markets, and so I expect to see a peak in some of that over this third quarter of 2021, and then some consolidation, some pulling back. I explained for months why I thought that late June, early July would be a major top in crude oil, and why that should take place between $73 and $76, where there were a lot of multi-year upside targets and wave objectives, and the energy markets are kind of fulfilling that, and I think that they're into a multi-month correction phase, with the first leg down just completed recently. But there's other markets too, the grain markets. I just put out an alert last night, and which was July 21st, and said that if on July 22nd, 23rd, soybeans start to show some signs of reversal lower, that they could enter a pretty sharp sell-off here. And so I'm watching the end of this week and then the coming weeks to see if even the grain markets start to give up some of the gains they've had all along. My focus has been that July 2021 would be a multi-month, possibly multi-quarter top and turning point in the overall grain market. So there's a lot of factors that are contributing to my expectation that we're near a peak. And certainly if the talking heads are starting to really tout it, you can be sure that we're probably near some sort of peak, even if it's not a final peak.
Now, would a drop in grain prices be unexpected with that huge drought that's hit the prairies of both the U.S. and Canada?
Well, if you already know that, then it's already factored into the price of the markets, and often it's factored in before the majority of people know it. And so it's that old adage of buy the rumor, sell the news, or buy the expectation, sell the realization. And markets go, you look at soybeans and they've gone to just almost multi-decade highs. Now, a lot of that was also on the Chinese buying that started last year, part of the trade agreements, and then flowing into the supply concerns with, like you said, the drought. And so the markets are always trying to discount expectations, sometimes 3 to 6 months out. So if they've already factored in all but the absolute worst case scenario, then what is left to drive them higher? And how likely is it that that worst case scenario doesn't quite come to fruition? Maybe you get some incremental positive surprises, positive as far as the crop, and that those type of things really hit the market because expectations have to be continually reinforced, those positive expectations for price. And if they're not, and even worse, if something comes out that's just even a little bit negative on price, then you get those sharp sell-offs because it's the pendulum scenario where the market always swings beyond that point of equilibrium. So to the upside, it has likely swung to an extreme farther than it was justified by current fundamentals. And so when some of those expectations are not quite met, the pendulum will swing a little farther to the other side, to the downside, than what is really justified. So from a price perspective, I think that you're in that time frame where the grain markets could see a sell-off from mid-July into mid-August, and potentially, depending on what happens technically during that sell-off, if I'm accurate or if I'm right on that expectation, but what certain trend indicators do during that time frame, that will give me much better guidance on what to expect beyond that time frame.
The stock markets seem to be kind of flopping around with down days and then more rises in the market, but are they showing signs of topping out and perhaps could be in trouble this fall?
I think that we have entered a period of vulnerability for the stock market, and I've explained some of the longer-term cycles, really have discussed them since January and February of last year, 2020, and that's because one of the most consistent, almost uncanny cycles that has governed the equity markets is an approximate 16-month cycle. And the second to last phase of that came into play in January, February of 2020. Discussed it at length then, why I thought that would trigger a 20 to 40% drop in the market, but then that the market would ultimately head to higher highs leading into the next phase of that 16-month cycle in May and June of 2021, so where we have just passed through. Each time you've seen that cycle recur, you have certain markets, certain sectors that lead the topping phase and the turnaround, and quite often that's the Dow Jones Transportation Average, which, sure enough, that was the one peaked in just past mid-January of 2020, and the S&P 500, NASDAQ 100 took until late February to really put in final peaks, and then early March to see significant sell-offs, whereas the transports had already been in a correction for 4 to 6 weeks by the time the stronger indexes started to show signs of a break in the dam, a breach in the dam. And once again, the transportation average, it topped in May of this year, so 16 months from its January 2020 peak, and it gave some of the earliest signs of weakness, but so did other indexes like the Russell 2000, the S&P Mid-Cap 400. Most of them topped in May, some of them even back in March and retested those highs in May. And they have been in corrective modes ever since. Some of your, like your airline stocks and the transportation average, well, most of them have already dropped almost 30% from their second quarter peaks. And there's a lot of others, not just the airlines. There's a lot of other similar stocks that have been taking a hit, even though the S&P 500, the NASDAQ 100, and to a lesser extent the Dow Industrials have been holding up through this time frame. I explained why I thought that the NASDAQ 100 would see a final spike up last week. I was targeting right around 15,000, and then all the markets would be, after July 12th, 13th, all the markets would be primed for a quick sell-off into July 19th, and I detailed all this before the fact, and then that some of the weaker ones, like the transportation average, might actually set intermediate bottoms during that July 19th time frame, because they've already expended a lot of their selling pressure, but that the NASDAQ 100 in particular, I thought and still think that it could see another downturn July 22nd, 23rd, and then sell off into month end. And if it can drop down to specific target level that I have, it could be indicating that a larger magnitude correction is in its initial stages. So very often, some of this analysis is a step-by-step process, that there's some general overriding cycles, and then there's the technicals that trigger some multi-week tops or bottoms, and then looking for confirmation to see if it's going to turn into something larger magnitude than that. And that's where we are in markets like the NASDAQ 100 and the Dow Industrials, that I think are going through their own topping phase and getting ready to see a little bit more significant downside in the coming weeks, perhaps for a couple of months.
What's going on with crude?
Well, like I said, I had very significant cycles looking for a peak in late June, early July. I think that peak is going to hold for several months. My initial downside target for a quick 2 to 3 week drop was right around $65 a barrel, and I explained why daily cycles were bottoming on July 20th to the 22nd. We just hit that 65 level on July 20th, so for the initial sell-off, it's fulfilled what it should and is likely to see a decent rebound, but then I think we could see another leg down into mid-August. And once we've seen that leg, I would expect crude to trade in the range that it's set from early July to mid-August, start vacillating in that range for a couple months, possibly stretching out for quite a bit of the rest of the year, but I'll have to see what the action of the next couple of weeks looks like to see if that's really a viable possibility. Gold
and silver, where are they in their cycle?
Well, they are definitely towards the end of a multi-year upcycle that dovetails with what I talked about for several years with this 40-year cycle, where there's often a battle between paper currency and hard currency, and it's happened every 40 years, usually between the 6th year of the one decade and the 1 year of the ensuing decade. So on a 40-year basis, 1776 to 1781, 1816 to 1821, 1856 to 1861, right around 1900, right around 1940, then 1976 to 1981, and then that whole 40-year cycle was coming into play again, 2016 to 2021, and a lot of other, they're real broad cycles that I use as a backdrop for my work. But there were so many confirming indicators in 2016, leading into 2016, that said the same thing, that gold should embark on an overall advance into 2021, that I even did back in 2014, 2015, a series of reports called 2016 the Golden Year, and explained why I thought gold would enter a new bull market and see its first significant advance in 2016. And that would corroborate or validate the outlook into 2021. Bottom line is we're now on the other end of that whole cycle, and I explained starting in 2018, why I thought that gold, a lot of the mining shares, gold stocks, gold and silver stocks, and gold and silver themselves would see a pair of very significant peaks, first in third quarter of 2020 and then right around May of 2021, which have taken hold. But I do see reason to expect a retest of the highs in some of those markets in August of 2021. But once we've seen that, and particularly if most of the metals stay at or below their recent highs, I think we're in for a bigger downdraft in the months that follow. And that goes along with my outlook for a bottom in the dollar in May of 2021, and that's been a uncanny 38 to 41 month cycle in the dollar, or the dollar index in particular. But it is already showing signs of bottom, and I think for whatever reason that the dollar is going to start to regain some strength in the coming 6 to 12 months, and that could be one of the factors applying some pressure on gold. But for right now, I think that gold could have a quick surge from mid-July into at least the early part of August, possibly middle part of August, and that's going to be the real pivotal time and price levels for all the precious metals and the indexes like the XAU and the HUI share indexes.
What's going on with interest rates?
I have been looking for a secondary top in bonds, so that would be a secondary low in interest rates. And when I say secondary, it's just, from the bond perspective, a lower high than what was seen back in July of 2020, and in regards to interest rates, a higher low than what was seen last July, August. I thought we would see that secondary extremes in July of this year, 2021. So we are right there where I think that the rebound in bonds and the dip in interest rates is very close to an extreme. If stocks are able to see another quick sell-off, maybe you'll get one of those quick flight to quality rallies in bonds and notes leading into the end of the month. But I think we're within a couple weeks of that secondary top in bonds, after which I think they're going to enter a new 6 to 12 month downtrend, and that would mean that interest rates start to edge back up. So that's all part of broader analysis that had me expecting an overall uptrend in interest rates from July of 2020 into at least third quarter of 2022, possibly stretching into 2023. I still think that's the case. Doesn't mean that it's some major spike high, but on balance, interest rates should move higher, bonds and notes should move lower during that overall cycle.
Looking at cryptocurrencies, do cryptos like Bitcoin have a cycle?
Yes, they definitely do, although I take it with a grain of salt because there is so little data going into it, and really most technical and cyclical analysis hinges on mass psychology, and for mass psychology you need to have a decent amount of historical data. So I have seen short and intermediate cycles becoming more consistent in the crypto markets, and also technical analysis. I mean, Bitcoin just is following a textbook wave scenario this year. It had upside objectives at 65 to 66,000, and then from there, as we were turning from there, I explained why I thought that Bitcoin should drop down to about 29,000, and that was based on where it had bottomed in the beginning of the year, but also from a wave perspective, that was the time, the low before its final move up, and that is a key level of not only support after a rally and a top has been seen, but it also becomes an objective when a market has completed what Elliott Wave defines as a fifth wave. And so that move, if you go back, now I'm going to take a quick step back. If you go back to March of 2020, that was a major bottom. We saw an initial 3 to 4 month rally, then it pulled back into a low in early September of 2020. So that was the first and second wave. First wave being the advance, second wave being the pullback. Then you saw the surge into early January, so that was the third wave. Then the pullback was the fourth wave into actually mid-January, I should say, was when the low was. And it bottomed just below 29,000, 28,860 on one chart, one category, and then surged in its fifth wave up into April. Well, once that, and the April objective, I had published these targets before the fact, that 65 to 66,000 was a major upside target where I thought we would see a 3 to 6 month, possibly 6 to 12 month top. Bitcoin topped right in there, and immediately its downside target was that mid-January low just below 29,000. Well, we dropped down, hit 30,000 in mid-May, and then spiked down to just below 29,000 in late June. So from a price and a wave perspective, it very closely adhered to technical analysis and really gave a textbook picture of that analysis. And I've been saying since 29,000 that I thought Bitcoin needed to rebound and probably get back up to 41, 42,000 before it would be in any position for additional selling. And I'm looking at early August as being a time frame, late July, early August, when that is a little bit more cyclically likely, but I'm more focused on the price than the timing in this scenario. So we just spiked down to 29,000 again, and so I think that it should hold that level and see a nice rally back up, probably close to 42,000 in the last 2 weeks of July, maybe stretching into early August.
Are there any geocosmic cycles we should be keeping an eye on right now?
Well, I'm definitely focused on the solar cycle 25, the cycle of sunspots and solar storms, if that's what you're referring to, or if that comes under that umbrella of what you're describing. I definitely think that is going to be a factor in some surprises over the next couple years, and potentially things that hit the market, even if it's just for a few day basis. But you've got this 11 and a quarter year cycle that's very consistent with sunspot activity. I had done in early 2019 a report that I've sent to a lot of your listeners, and I'm always happy to send it again, and most of it's old news now, but you could see a lot of the thinking and cycles and analysis that went into it. But it described where I thought late 2019, early 2020 would usher in a new phase, not only in the solar cycle. That was pretty much expected. Scientists and astronomers and whatnot had pretty much been anticipating that aspect. But there was everything from what I called stock panic cycles that I was looking for in early 2020, and that they had recurred on a very consistent 11-year basis. And also what I termed in early 2019 as global shaping events that I thought would come into play in late 2019, early 2020, and have that impact on the stock market. And what I was detailing back then was that I believe they're all connected, and that doesn't even necessarily mean that there's a direct cause and effect. It could be a bigger overriding cause that's influencing all of those things. I don't know. Technicals and cycles often don't give you the reason, but they give you the what more than the why. And so all of that built my expectations that from early 2020 into about 2024, we would see some very sudden and abrupt shifts, surprises that were coinciding with the solar cycle, not necessarily caused by it, but there's enough data and enough consistent recurrence that I'm not going to ignore that these things tend to group together at the same intervals. And there's other cycle work that I have done, and in a couple issues of my monthly newsletter just in the last few months, I've delved back into the sunspot cycle and why I think that 2022 and 2023 could have some surprises where that's concerned. And I always try to stress to my readers and so also to listeners here that doesn't mean it's a chicken little sky is falling scenario. It doesn't mean that, it's time to head for the hills and go off the grid. It just means that you have these type of challenges that come about on a regular interval, regular cycle, and so it's time to start being a little more alert for them, seeing if there's any signs of it. I was reading just in the last week an explosion on the sun that was on the opposite side of the sun, so facing away from Earth, and yet it was so powerful that it had projected a great deal of electromagnetic waves and force towards Earth, like through the sun and out the other side. And so there's evidence that the sunspot cycle is just beginning to heat up, and even just a year or two of strong solar storms, many of them just get projected out into space depending on how the sun is positioned when it's projecting out the CMEs, coronal mass ejections. But odds are that some of those times it's going to be directed towards Earth, and it can also, that's when they also get worried about satellites and whatnot. They build a lot of protective mechanisms into them, but when you get the stronger storms directed straight towards them, they become vulnerable as well. So that's something I'm definitely starting to factor into my general backdrop outlook for the next 2 years. And I think it's something to be just a little bit aware of. Like I said, not some panic-inducing thing, just something to keep abreast of and not to ignore.
Eric, anything else you think we should be keeping an eye on right now?
I don't know. It seems like quite a bit that we've covered, so I think that's probably a good place to wrap it all up.
Eric, thank you so much for being on This Week in Money.
Thanks for having me back, Jim.
My guest has been Eric Hadik, CEO and President of InsideTrackTrading.com, Inside spelled INSIIDE. Coming up, Allan Mark Angell, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Allan Mark Angell. He's one of the top realtors in Canadian history. He's sold more than 4,000 properties. He's located in West Vancouver, British Columbia. You can find him online at theangelgroup.com. That's spelled ANGELL group.com. Allan, welcome back to This Week in Money.
I'm glad to be here.
Allan, what's happened in the first half of this year to real estate on the North Shore of Vancouver and the West Side of Vancouver?
I'll give you an update. Just to start this off, the year 2018 was the worst in our real estate history. 2019 was second. And by August of 2020, that was the third worst year we had ever had. But the market picked up in the fall, and the reason it did was the interest rates were so low, and a lot less houses, half the normal product on the market. And that lasted until about the springtime. So I'll just give you a couple of ideas about the market. I do the lower mainland, the greater Vancouver area, and I compare it, and I have a chart from 1984 that shows you how many sales each year, and then I have the average sales for that time, and the best year and the worst year. So if you look to the end of June in Greater Vancouver, It was just above an average market, 7% the average market. Now, I laughed because everybody talked about how hot the market was. It was just insane. They said, this is the best it's ever been. Well, it isn't even close to what it's ever been. Compared to the best year, so we were 7% up above the average, but over the best year, we were still 33% down. But what was the good news? If you take years 2018, 19, and 20, we were 49% above that. So that's why there was so much hype about the market, because it was 49% over the previous 3 years, but put it back to just an average market. The interesting thing, the houses on the market started in January at 2,809, and they're up 44% at this stage. So it's interesting how it's done that. And West Van, we're just about even with the average. We're at 412. The average is 413. So we've hit an average market, but compared to the last 3 years, it's 52% above the last 3 years for the 6 months of those 3 years. And compared to the best year, we're 30% down. But as I said, we started in January with 268 houses. Now we're at 472, so we're up 44%. So the market has softened a lot. And if you take the sales, like March was the best month, we're down 41% since March. Greater Vancouver is down 43% since March. Apartments, though, at both Vancouver and West Van are up. So it's interesting how the apartments have increased. Vancouver's up 33% for the first 6 months, and West Van's up 24%. Now, the interesting thing, Vancouver West, I do every area from Maple Ridge in. I don't sell out there. I like to check all the areas to see how they compare. I mean, Burnaby, Vancouver East, Richmond, everything there is. So basically, all the areas have gone from where they were in the last 3 years to about average market. So it's not a great market, it's just at average sales, but the last 3 years were the worst, basically 3.5 years were the worst in history. So we've improved greatly over that, but we're still at average. The only area that hasn't is Vancouver Westside. So they're actually down from the average 29%. I mean, they have 665 sales the first 6 months. Their average is 934, which is very interesting. But that amount is up over the last 3 years, but from the best year, it's 57% less. So all areas have hit an average market except for the West Side. Richmond as well, I think, is down about 3 or 4% up below the average, but as I said, the West Side is 29%. So what that means to me, because of the vaccine and all the virus and all that, the Chinese population in West Side haven't been out buying houses or selling their houses. So that is interesting. But all areas are up but have softened. They've all dropped about 40% since March. Now, you could say it's summertime. It always slows in the summertime, but people are starting to go away now, so that probably has something to do with it. But the product now is slightly above average. The amount of listings is slightly above average, so that's probably the main reason you've gone from, your average is almost increased by twice as much as the start of the year. So that's why it has slowed down. So that's what's going on in the housing market.
Where has the buying been coming from?
Well, it isn't. I got a call from a client yesterday. He says, "Is this foreign buyers?" No, it's not. It's not foreign buyers. I've had one person in the past year come in from New York, but he moved. He's moved here because of what's going on in the States. So the buyers are from here. People like to move for various reasons: job changes, the kids leave, or they need a larger house. It's just normal people, whether it's Iranians, the Chinese, Caucasian people. They move for various reasons, and that's just what. So basically, we're in an average market, and so it's average people who are buying houses.
People that have been selling, did they buy another home?
Yes, they do, because the market's been on the upswing. I'll give you an example. I had a house I sold a waterfront a year ago in December, and the people had a very nice house to sell, but I appraised it at 4.7, 4.8, but they had the year and something to do on the oceanfront, so they didn't sell. So I sold these a few months ago for them, and they got $800,000 more than I appraised it at the Christmas before. So that's you could say that's what the market has done. So it's a good so people are wearing that the market's been stronger. So anybody who sells, they're going to be buying for sure, or they're going to be afraid they're going to lose out. Now the market is softening, but it's still better, much better than it was as the last 3 years. We're back to a normal market.
Was March a potential top in real estate prices and sales?
Well, it was March. I mean, some areas was March, some areas was April. But yes, that was the height of the market for this year. But over the history, normally March, April, and May are the best months of the year all the time. So that wasn't a surprise.
The cover of the May 17th issue of Maclean's magazine was titled "The Great Canadian Home Rush." Could this be an indicator the housing market top is already in?
Well, you could argue that because, as I said, the market's dropped, 90 sales to 54 in West Van. I mean, that's big, but a lot of times it does that in the summertime, so it's too early to predict that. But there's so many houses on the market now that, yes, it's softened. You could say March was the peak, but as I said, to me, it's falling back to a normal market. So I'm not worried about a drop all of a sudden to drop off, because when the market does change, go up or down, it doesn't do it for 6 months and goes the other way. Normally, like 18, 19, and 8 months of 20 were the worst 3 years in history. Now we've had 6 or 7 months of a reasonably okay market. So I don't think you're going to find that they're going to all of a sudden start dropping in prices by huge. I mean, if the virus comes back and they're forced to go back with masks and hide in the houses, that could have affected, yes, but I'm hoping that it's not going to.
Is mortgage lending at the bank still on the conservative side?
Oh yeah, it's without a doubt, it's much harder now. It's been hard for a long time, but it hasn't changed. I am getting a few calls from the banks saying we have funds to lend out, so I think it's getting a bit easier, but it's still tough.
Following the lockdowns and increased unemployment, are some people being forced to sell their homes to cover their debts?
I haven't seen that because, I work in West Van. We work downtown apartments, the condos downtown. I look at the Westside stats because we get a lot of clients from over there who come here. So I haven't seen any of that at all, but I can't speak for, outside areas because I don't sell houses there. So it hasn't appeared here at all.
Some high-end homes in West Vancouver are listed for sale at 1.5 to 2 times their 2021 assessed value. Does this cause homes to sell for a higher price or to stay on the market longer than they need to?
Well, I actually, every sale that goes through, I check the BC assessments. And because we never used to bother with the BC assessments for years and years until basically the Chinese arrived, and they always ask for the assessment because they figure, what does the government say the house is worth? Well, we who lived here all our lives said we don't pay attention to that, but all of a sudden they said, well, why, if the assessments are 4.4, why are you asking 6 for it? So because of that, we started to study assessments. So it's interesting how that's changed. And 2018 and 19, 70% of the houses sold below assessment. 73% sold below assessment. Now, all of a sudden, last year, the assessment finally dropped. So now we're going the other way. Now we're about 68% above assessments. But the high end is very strange. The normal house is $2 million, $3 million, $4 million. They're above assessment. But the high end, some of them are twice as much as, you could have a $10 million house, it'll be assessed at 6. I also check how many days are on the market, but there doesn't seem to be there was one that came out, and it was $3,400,000 above assessment. It was in the 8s, and it sold the first day. So a waterfront could take 2 years to sell. The high-end houses always could take 2 or 3 years to sell because there wasn't as many buyers for those. So I don't think the assessments, they buy the house by looking at comparables at other houses. If I've got, I had a $6 million house, $7 million house, 6.9 the other day, and a guy walked in and said, I just saw one down the street for the same price. This is twice as nice as that one. They buy it not because of the assessment, because they look at several houses and see how they all compare, and they say, well, this is the best value around. So they don't change their mind because of assessment. And also, what you can do, if the house assessments seem to be too low, a lot of times they are, you can go in and have them increased, because you're getting then you charge more taxes. Everybody thinks that they should keep their tax assessments down, but in actual fact, the extra money you're going to gain on the sale is far higher than you'll pay in taxes. So I always advise people, don't change it. You don't want it to be too low.
If people price their property above the market value today, are they likely to get a sale?
It's people, they spend time, and now especially they go out and look at houses now. Now we're allowed to have open houses, so it's easier to see. So, as I said, if they're too high, they probably won't get it. They'll probably drop the price.
How are West Vancouver waterfront properties selling?
Well, they're not. The average waterfront since the 80s is, I'm talking from AMY.V to Horseshoe Bay, is 17 a year. 17 a year. Now, the last few years, we've only had 8 or 9. I think last year was 10. That was for the whole year. We're at 11 this year, and it's only just halfway through the year. So we're at 11. So that's going to be higher again. Like everything, it's going to be higher then. It's probably going to be 16 or 17. But when you compare it to the highest year waterfronts ever in West Van is 33. We're nowhere near that. So it's going to be the same thing. You'll probably end up at an average year for ocean fronts. So they're no different from the other houses.
Allan, could you describe some of these waterfront properties for people who live outside the Lower Mainland and maybe don't appreciate the spectacular views that you get from those particular properties? And what would a typical one sell for if you had to average out the price?
Well, I've sold a few hundred of them in my career, just to show how they've changed. My first one I ever sold was in I started 72. My first one I sold was in 1973 on one of the best streets in West Van, and I sold that for $110,000. And I listed and sold it, and so I made $7,000, and I thought I was rich. Now, a few years ago, I sold one 2 doors away from that house for just shy of $30 million. That's the biggest sale in West Van we've ever had. So think of how that's gone from 110 to 30 to $30 million. That is shocking. Now, they've dropped in price. The high end dropped a lot in the last 18 and 19. If your house was worth 10, it probably went down to 6. So the ocean. The big difference between we walk our dog at the beach here, and we walk the dog at Spanish Banks area too. Now, we get the sun side. It gets dark there. We get the sunshine. There's no comparison which side you want on the waterfront. All our houses are spectacular houses. Lots of sun. A lot of them have a beach. Further out, you're on a cliff and that. But the value, I think, 17,000 or 17 million is the highest sale this year. But most of them are probably 9 to 10.
How are high-end West Vancouver properties selling?
They have improved. They've improved a lot because they weren't selling at all, because our company has sold a lot of the high ends, more than any other company over here. But for 2 years, for 19 and most of probably half of 2020, they were just they were out of the market for 2 years. But then about just in the springtime last year, they started to sell. But there's only a few of them for sure that sell. But it's going to be higher this year than it's been last year. It's exactly the same. They have increased as much as the sales in the lower end.
What percentage of homes on the North Shore and the West Side of Vancouver are empty?
I don't have any idea, to be honest with you. I see some empty houses, but I don't pay attention to them. So I really, to be honest, I don't have. Because of the tax laws, you have to rent or something and that, or you have to pay all things. I would think it's dropped 50 to 60% because in the old days, a lot of people didn't want to rent their houses out if they're gone for 6 months. They left them empty and that. But the Chinese investors, Iranian investors, they would just leave them there. But now you have to rent, so it's it's something that people do. You have no choice.
I think you covered this, but have foreign buyers been active in this housing market?
No, as I said, the one I just had to know, but they moved here. I mean, I haven't seen. We used to see where the houses were being shown. The real, I've been around so long. I know all the realtors. I know who I am. So I would ask about their buyer. They just arrived here. We had this all the time. Every week I had 2 or 3 houses showing from foreign buyers. I can't tell you. I have no idea when the last foreign buyer I had that just arrived. It could be a year. So the taxes are so high. By the time the foreign buyers buy more expensive houses, so they're basically paying the 20% tax plus the 5% property purchase. So they're paying 25%. There was a sale that we thought had gone through for $30 million, so it would have tied my large sale. But when the guy found out that he had basically 25% tax to pay, and that was last year, and the market was falling at that time, he walked away. He didn't remove the subject because that's 25% on 30 million is a lot of money, and so but even on 5 million or 10 million, it's a lot of money. So no, they're not buying, or if they are buying, then they're putting it in family member's name here or something else. So, but I'm not aware of any foreign buyers at all.
Are interest rates the elephant in the room when it comes to real estate?
Well, the interest rates, they've been low for a long time, and I don't think they're going to go up much in the next 2 or 3 years. So, I mean, really, they should make you buy. If because you can't afford to buy with the interest rates today, you're never going to be able to buy what they got. Even though the market dropped 30 to 40%, when houses were 10 million and then went down to 6, or they were 4 million, around to 2.7 or 8, that's still a lot of money. A lot of money for houses. It's still too expensive here.
When real estate prices increase or decrease, is it based on the structure or the land?
But basically the land. I saw a lot just down the street from me. The guy, I thought, stole it. It was just one of the worst lots I'd ever seen, and it was on just a cliff and hard to build on. And the guy bought it for $2 million a few years ago. He sold it for $1,075,000, and I thought that was way too low. But the guy only held it for 8 months, and he sold it for $1,950,000. That was a great flip, but that's unusual, very unusual. That's the only one that I've seen.
If this housing market is in a bubble, what could we expect when this bubble bursts?
Well, I'm not convinced it's in a. It was long overdue. We had 3 years, almost 3 years of hell. When you have the worst, we had 321 sales in 2018. The worst year previous since I've been a realtor was 454, and then the next year was just over 400, and the average is like 750. So it was the same through all areas in the lower mainland. 218, 9 were the worst too. So it was so bad. So there was, and the market was falling, and people like to buy when the market's on the rise, not when it's on the fall. So I think we're not in a bubble. We just had a lot of pent-up demand. We didn't have a lot of houses, so people thought, well, God, I got to get something. If this vaccine thing works, the market's going to change for sure. But I told my clients, I send an email out to a lot of people are close, and I told them in January, look, they started to move up in the fall, but there's so little product right now. The January the 1st, I checked the inventory for all areas, so I can tell you how many in Maple Ridge, how it compares. And I knew from that, I said, okay, but what's going to happen with these vaccines coming out? There's going to be a lot more buyers who come out the wetworks for sure, and the product's going to just flood the market. That is what happened. Some of the areas were like ours were higher than the average in inventory for June. So we've gone from the lowest to above average. So I'm not convinced. I think it'll soften for the summer because, let's face it, everybody's dying to leave. They're away. No matter what, they can't go to a lot of places. But, I had booked a trip to Hawaii for August, but I haven't been able to golf for over a year because I needed a new knee, and it was so painful. I was in bed for 3 weeks, so I've had nothing to do. I can't golf, so I'll be doing my stats. But so, as long as we're okay in the fall, I'm hoping the market will pick up again. The sales will improve in the fall. They always have in history. I expect the same thing to happen again. So if you're thinking of buying, I would think you should buy.
What are developers of high-end homes doing right now?
Well, they stopped construction. I think we had about 30 houses in West Van for that. They just stopped construction on the last 2 years, and so they were just boarded up because if you build a house, you get a mortgage on it, and then as it's more built, they give you more. But the guys boarded them up because they knew they had no chance to sell these houses, so they just boarded them up. And now they're starting to build them again because it's going to take them. Most are going to be 8 months, a year to build, and they're hoping that the market will be. I think it's getting back to normal now, you could argue. So hopefully by that time, and the expensive houses are starting to sell more than the last 2 or 3 years. So they're trying to get back to normal because they can't leave these houses. There's a lot of money they got tied up in it. So now they're starting to build. And apartment sales throughout the lower mainland have had a great year. A lot of people have been buying apartments. I've been selling houses on Vancouver Island, Gulf Islands, the Sunshine Coast. So many of my clients, I've had more trips on BC ferries this past year than I have in my whole life. A lot of people are buying second places because now they've gone through this. They don't want it to happen again. They want to have a safe place to go. So the island has been fairly strong because they said that guys like me that are going over, they have to go on the ferry and sit down in your car down. That's the way it's been. I took my iPad, watched a movie for 2 hours, and that's what we did. And so, I sold house out in Coquitlam that I had, and I have a condo in New West for sale now. We go where we are. I never used to really go North Van, West Van, and then downtown apartments. But now, I like to work. I have this disease. I like to work. I'm an old guy now, but I'm probably at my peak now because I used to have 40 or 50 houses for sale all the time. Now I have 5 to 8, so I have all the time in the world. And my wife's a realtor too, so thank goodness I've had her because we've sold a few houses. But she's had to show them because I could hardly walk. So I got to get this knee fixed so I can get back to golfing and doing a lot more work.
This year, Sam Cooper wrote a book called Willful Blindness, discussing money laundering in high-end Vancouver real estate. Do you think money laundering could have an effect on high-end real estate?
Well, I haven't seen an example of that in all my time. You don't know about money laundering. And I have my approach is a little different about that. this money is made for whatever it's made, drugs or somewhere else in the world. They're going to spend the money. So money laundering means we're going to sell more houses, more cars, and more jewelry, say. So the economy is going to strengthen because they come here to spend the dough. So we can say, well, we don't want that, so they're going to go somewhere else and spend it. So it's money laundering. The government talks about it all the time, and perhaps it is, but I've never even heard of a case in West Vancouver that they thought there was money laundering. And so I guess that, yes, if we had a lot of it here, it would. But I'm not convinced that we have. I mean, I can't talk about Vancouver, but I know here, because you see here, West Van's kind of, a smaller area, so most of us know who's buying the houses, what nationality. Well, I checked last night for a client of mine, the golf club I golf at. They were saying, well, what percentage are Chinese buyers? What percentage are Caucasian? What percentage are Iranian buyers? So I go through all the sales and I check and see, and it's interesting because we, the Caucasian buyers, we're lower than the so now this year we're at 54%. So it's getting back to a normal market. The Chinese buyers, you have the Iranian buyers, they've lived here now for a few years. So they're as much a Canadian as I am now. So it doesn't really mean that much, but there's ways around money. As I said, if you got money to launder, you get a family member or a close friend to buy the house in their name and things like that. So, the government spends so much time investigating these things, but for us, I get a check. Somebody sells a house. There's a deposit check from HSBC or some bank. So we have no idea. And we're supposed to, if we suspect anything, we're supposed to investigate. How are we as realtors supposed to? I'm going to call the bank and I'm going to say, Mr. Jones, can you tell me where he got his funds from? They're not going to give us any information. We have no reason to suspect it. And I'm one of these guys. I'm not a favorite of the government. They should be investigated a lot more than most of the average Joes.
If there's any truth to the money laundering in high-end West Vancouver real estate, is West Vancouver a safe place to live?
Safe? Well, they get the money from drugs, but does that mean that where they live, maybe that's the normal thing there? I don't know. As I said, I've been here for so long. I've seen the first Iranians arrive in the 80s, the Hong Kong in the 80s. The highest year we've ever had in real estate, 1989, still the highest. Highest year ever is 1980. When the Expo was here, the Hong Kong Chinese arrived, and that pushed the market. That was still the best year. West Vancouver sold 1,201 houses. Since then, we've had one year at 1,104, and the rest have been good years have been 800. So that's still been. Westside was 2,800 sales. The second best year they've ever had is 22,200. So the Chinese arrived. Now, mainland China arrived at that, but as I said, I don't know. They're different people. Their culture is different. As a realtor, I've had to learn how to deal with the Chinese culture, the Iranian culture, and you learn because they grew up there. They grew up a different way than us. So how can we say it's wrong? They grew up, they're used to, their business was done a certain way, they brought it here. And the council has tried to change, made us take these courses, to do things, but you're not going to change a culture. If I went somewhere else, I'd probably do business the same way I do it here. And so it's just something we have to accept. But generally I find that I give sometimes seminars to a Chinese group, and I find they love real estate, but really, they're nice people. Iranian people are very tough to do business with, but socially, they're great. I got a few Iranian. I go to their house; they're absolutely they spoil me rotten. So we're different. There's good and bad in each. So you just have to learn how to handle it, and that's it.
If people are planning on selling, should they be listing now?
Yeah, I would. Yeah. Well, the summertime is slower for sure, but the market generally picks up September, October. Even though November's been a strong month for me, then Christmas. If your house hasn't sold, they take them off. I tell people, don't take your house off in December. 25 to 30% of the houses come off in November or December. I had an ocean fund years ago, and they're always harder to sell. It's very rare. If you sell it the first year, you're doing well. And I had it on for, it was going on to my second year. I took it off like everybody else. But then I left it on one year, and a guy from New York flew in on December the 19th and bought the place. So there's less product November and December. So don't take your house off the market because you're not going to get tons of showing. But if somebody's looking for a house November, December, they're buying a house. They're not like springtime. Everybody's locked up. They want to go out and see houses. November, December, if you get a showing, they're going to be buying your house or one of the others that they look at.
How can people contact you?
Angell Hasbun is the name of my name. It's Allan Angell. Malcolm Hasbun is my partner. But the easiest way to contact me is on my cell phone. It's an easy cell phone, 778-888-7474. 888-7474. And please, even if you live in Maple Ridge, I had a guy in my house the other day, and I was getting a new TV, and he lives out there. I gave him the stats of Maple Ridge, and everybody likes to know what is going on in real estate. So here's the sales. Here's what's happened last year, the year before. I give them the average, the best and worst, and it's interesting. So even if you need something in your area, I would gladly send that to you. I like to talk to people. I'm a chatty Cathy, and I love my job beyond belief. And if somebody wants a listing, I'll be overly excited to list because I only have a few houses, and I'm bored. I can't golf, so I have nothing to do. So it's Allan Angell from Angell Hasbun and 778-888-7474. And I like for it. It's amazing. Every time I do a podcast, I get people from Alberta. For the last 3 times, somebody from Alberta has called me and bought an apartment downtown. And so it's interesting who really hears your podcast.
Allan, thank you so much for being on This Week in Money.
Thanks, Jim. You take care. Thanks. Bye-bye.
My guest has been Allan Mark Angell, one of the top realtors in Canada. He has sold more than 4,000 properties, mostly in West Vancouver, BC. His website, theangelgroup.com, that's spelled Angell group.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Eric Hadik, and Allan Mark Angell. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@housestreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to Company Showcase, Larry.
Well, thanks, Jim. It's been an interesting week.
A busy week. 3 news releases from American Manganese.
Well, we try to release the news as it's received, and so there was 3. And some days, some weeks, there may not be any. But we don't generate news by just sitting down and writing up a news release. We have to get results on something.
So, what can you tell us about them?
Well, the first one was, as far as I was concerned, was probably the most significant. Head and head with the second one, but the whole idea was that we announced a shelf prospectus, and that prospectus is for up to $25 million. So all I can say is we would never have gone to that expense
unless we had a lot of interest from, deep pockets on that. So, that has been, is on the shelf. It's a 25-month shelf life. So, we can do it, whenever they want to pull the trigger or whenever we want to pull the trigger. Probably has to be some kind of a, saw off there, but, it tells you one thing. It tells you there's enough money in the pipeline that we should be able to meet our expectations on building a commercial plant. And that's the main thing. It's, the price is certainly a lot higher than the last release we did at 20 cents back about, I think it was November of last year. And but we're sitting with a good cash position, and we're not under the gun, which is a great place to be. And, I think it's a big boon for the shareholders. We've de-risked this thing all the way along as far as functionality and everything else and recoveries and purities. And, now we can de-risk, hopefully, people will look at this as de-risking the final build-out of a commercial plant. And the second release is to do with the work that we're doing for the DLA, the old Department of Defense, and it's on the Wendon stockpile, and we've got excellent results out there so far. It looks like that we may be coming up to another round with them, so that's what we're working towards. And again, we got the kind of results that they like. And so what can I say? I mean, it's an excellent position to be in. And our final release was on the ETC eligible, which means that we can move paper that U.S. shareholders have through rapidly. And we didn't have that before, but now we do, and so that will hopefully build our U.S. shareholder base. So, it sounds a bit innocuous at the time, but I'm sure that if you're a trader or a broker or an investor, you'd like to see that the company has that, so you're not locked into paper. We know how you can get locked in. It's a very long process to actually get your stock freed up to trade, but now it should be done, fairly instantly. So that's our big news of the week. It's been we've been trading in a range of 110 to 120, and I'm happy with that for the time being. This is the summer doldrums, and we can move forward with everything that we want to do. Everything is coming out well, and there's a lot of work behind the scenes on every one of these releases, and I just want people to know that it just doesn't come out like the same day, same release. It's a lot of tedious work, even on the DLC, the DTC, and so we're getting our rewards, and the rewards are we work for the shareholders. So everything's looking fine. I think the market took a real bad dip on the day we put out the shelf prospectus this week. It almost went down a 1,000 points, and now it's gained all that back, and so that's also a good sign. So I think right now the mining is taking a bit of a hit, and certainly the commodity prices are not cooperating unless you're in the critical metals space, and but everything that's happening is works for us, is the way I look at it. There's no problems. It's always something that it's just another goal to knock down. And so I wish everybody a great weekend, and I know I'm looking forward to it. It's been kind of a hit and miss on the sleep side, And so I'm hoping to catch up this weekend and just keep moving the project forward with the excellent staff I have and the excellent work that's being done by Cometco.
For people who want to know where you're traded and get more information about the company, where should they go?
Well, we're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. QB board under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. And you can get any information you want by going to our website because we try for transparency. And you go to our website at AmericanManganeseInc.com. If you have any questions, you can phone me at 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're welcome, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on July 23rd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.